stocks finishing essentially flat on the week, but the picture looked a lot different on Monday when the unwinding of the yen carry trade sparked a global market meltdown and added another level of uncertainty to an already jumpy market environment. So is the worst over? Well, joining us now is Mark Mobius, chairman of Mobius Emerging Opportunities Fund. It's great to have you back on the show, and that's exactly where I want to start with you, because we've been talking about the unwinding of this yen carry trade, and it's a tricky thing to fully get your arms around. Do you think the worst of this is over, or do you expect more ripple effects?
I think we're going to see more ripple effects going forward. It's just amazing to see what's happening in some of these markets around the world, particularly emerging countries, where their currencies are actually getting stronger against the U.S. dollar, which is unusual. As you know, usually these currencies are weak against the U.S. dollar, and you're seeing currencies like the Malaysian ringgit going up by 6% against the U.S. dollar. That's an incredible change. And one after the other, you go down the list, Korea, Taiwan, all these currencies are up 1%, 2%, 3% against the dollar. So this is a signal, I believe, that there is a waning confidence in the U.S. market. And of course, a lot of people are burned with the fact that Microsoft, Apple, these great companies are down by 10, 15, 20%. So I think we're going to see a lot more uncertainty going forward, particularly with the election coming up. No one is sure as to what will happen, whether Harris will come in or whether Trump will come in. And of course, they're entirely two different programs of those two parties. The Democrats, higher taxes, real problems with companies in terms of those taxes. And then, of course, with Trump coming in, lots of restrictions on trade. So lots of uncertainty out there, I would say.
It sounds like you think political uncertainty is what is causing the dollar to weaken against so many of these currencies. It's not the anticipation that the Fed is finally going to start to cut rates here?
I think the rates are just one factor. I mean, I think a lot of people put too much emphasis on the interest rates. What they really should be looking at is the money supply. You know, you saw a money supply going up by 20+% during COVID. Then it came down. It actually started decreasing. Now it's come up by 1 or 2%. You have to keep an eye on that because a lot of this liquidity is squeezing the markets. In other words, the lack of liquidity is squeezing the markets. A lot of people have spent all that money that was distributed during COVID, and now they're in trouble. They have problems, and that's the reason why you have this yen situation and other things happening around the world. So I don't think the interest rates are going to be the real determining factor going forward.
Okay. The last time you were on with me, which was a couple of weeks ago, you said China's investable again. Here's why. I wonder what you think now that we got some data overnight from China that's showing inflation beginning to perk up. I mean, the concern had been deflation. We're certainly hearing it in earnings from consumer companies and the like, that China seems to be weak. What is your sense of that market now?
What's happening now in China is that they're on the mend. You know, as you mentioned, a lot of people are concerned about deflation. Now you see inflation coming back, which is a good sign, a sign that the consumer is back. It's going to take time. But generally speaking, I think China is on the mend. And I think you'll see the Chinese market doing better as we go forward. It's not going to happen overnight, but I think it's probably a good time to start looking at these Chinese stocks.
We do have these flaring geopolitical tensions in the background. I think a lot of folks sitting on their hands wondering what happens next in the Middle East specifically. How much geopolitical risk premium is priced into the markets here? Or is this one of those situations where unless something really incendiary happens, investors are sort of brushing it off?
Well, you see, that's part of the equation. The uncertainty about what's happening in the political environment in America touches on Ukraine, touches on the Middle East, touches on China, because these two political parties will have a different stance. And the perception overseas now is that there's lots of uncertainty. What will the Democrats do? What will the Republicans do? And generally speaking, the feeling is that the Democrats will be more aggressive in Ukraine against Russia and in China, whereas Trump may be more moderate. But again, the uncertainty is very, very high.